Maestro here. Let's talk about trading. So today on Bitcoin, we took a couple of shorts. Price has been moving fairly aggressively to the upside, and it looks like it's reaching some levels that it has been getting rejected at all year. So the short play was there today. We're going to talk about this, but the market is fairly stingy. There's a lot of upward movement and there's a lot of bulls in the arena right now. So taking shorts in these type of atmospheres, you have to be very nimble and you have to kind of be very aggressive when it comes to taking profit. And we didn't necessarily do that today, and it sort of reflects in the price action. So we didn't take any losses, but we didn't add any major wins. And currently right now our account's sitting at 25,231. So we're going to talk about the trade. We actually recorded it, so you'll get an idea of what I was thinking at the time that I was trading. And yeah, it was a fairly fun day, man. Let's go ahead and dive into it. It's the long and short. Welcome. Let's go. Welcome to the long and short. Maestro here. Thanks for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money, price action trading techniques from a long and a short term perspective. If you want to be a better trader and you're trying to figure out ways to navigate in this market, you found a pretty good place to come. Please go ahead, hit that like and subscribe button, bell notification. You know, all of the things that we ask you guys to do to be aware of when we drop new content. All right. Hopefully you guys learned something today. Let's go ahead and dive right in. So when we first jumped into the charts this morning, we were looking at a couple of things. Price was moving into this sort of legacy area of liquidity here that we can go back to the beginning of the year. Price has been getting rejected right at around $45,000 when it comes to Bitcoin. So price did reach up here this morning, and this did offer us the ability to take a short. So we're going to talk about this, after we show you guys the couple of videos and the actual example of the trade. So let's dive into that first, and then we'll come back and talk about it. Okay, the short has been entered here. Place the stop loss right below it. Let's zoom in a little bit here so the folks can see. All right, so the red line is where we entered the short. The stop loss is placed directly in front of the red line. Okay. Now, the reason why we do this is to protect ourselves in any trade. Okay. If the price does come up here, take us out, at least we took something home. Okay. But as you can see, we're starting to push in our favor here on the short. All right. Now, what are we looking at? To the left-hand side here, you have multiple areas of imbalance. Price did come fill these in. All right. So this may be a short-lived short. All right, we're anticipating that price is going to meander around here for a little while, so this stop loss will probably get hit. But either way, we're protecting ourselves in this trade. All right, what are we looking for? Moves to the downside, okay, and balance is here for price to catch. Now, granted, we are on a 5-minute chart. If we go out to the 1-hour chart, we can probably see this a little bit more clearer. All right, lots of imbalance to the downside here, guys. Right, so the market does need to correct some based on these moves that were made yesterday. But the correction down should probably only be for a retracement back to the upside, right? So this essentially is trying to catch the retracement, trying to see if we can participate in this move downwards, pretty much just to these lows here, right? If price does come down here, capture these lows, take this liquidity, we'll be happy with this trade. We'll take some off, and we'll probably leave a little bit in to see if we can capture a few of these lower areas of liquidity. But right now, we're sort of playing on a nice edge. And this is always the worst time in a trade, right? As you're getting closer to your lines and you see price is trying to push back up to it, right? So if we do get stopped out here, no worries. We are taking a pretty decent shot to go short. So let's see what happens. Thinking about taking some profits right here, so I probably will, and I might move this stop loss, but I want you to clear this imbalance. That's the main take profit, and I'm going to close some of this here. How much? Let's see. Let's do a partial close. 0.1. Always take some home, baby. So let's go ahead and talk about this trade sort of from start to finish. And the first thing that we need to do is sort of move the chart over a bit, because what I want to start to do is ask you guys questions. Trading is all about thinking, right? It's a thinking man's game. Now, there is analysis paralysis, and you can get caught in the charts so much that you start to lose focus on what you actually should be doing, right? Watching price action is a very advantageous thing, though. So I advise you guys, if you have the chance to watch it, whether it's on your phone, a computer screen next to you, you can put a little small window on your computer desk at work, whatever method you have to watch it, okay, I would recommend watching it. And the reason why we say watch price is because eventually you'll start to get into the ebb and flow of price and what it does at certain times of day or night, right? And once you get into the flow of price, it becomes a lot easier for you to anticipate what may happen next, okay? And once you start to get to the point where you can look at price and look at what's happening on the chart and not really even touch it with the trend line, anything, not even look at indicators, because as you guys can see, we trade with no indicators here. When you just look at a price chart and you're able to say, yeah, price should go down here or price should go up here, that's when you're starting to reach a level of proficiency of watching price action and sort of being anticipatory in your movements. And this is when you're going to get really good at trading. All right. So we keep a chart up, right? Wake up in the morning, turn the chart on, right? So when I woke up this morning, this was the price action that I was seeing, right? A lot of bullish movement. And I'm sitting here watching it on the chart and I'm saying to myself, we should go short soon. I was just thinking eventually price is going to overextend to a point where it's going to get rejected and there's some orders sitting over liquidity that we can see right here, right? We're right in this blue zone. Now, if we were to scale this out, and we're going to do this in a second, we're going to show you all of these legacy levels and basically where Bitcoin is being trapped in a range for pretty much the entire year. We're going to show you where that range is. We said back in January, price may start to range out. Where's the range? Where's the range, right? We asked that question on quite a few videos. And now it seems like we're starting to find that range. And of course, you need time to develop the highs and the lows of the range. But now we're starting to see them going into the FOMC. So as we anticipated, price is pretty much doing exactly what we thought it would do going into the FOMC, which is starting to find a range. All right. So let's talk about this trade. All right. Now, again, what I want to challenge you guys to do is start looking at price from a different perspective. Most people, they just look at the current price action. If you want to get an idea of the proper plays and perspectives to take in the market, right, what you have to start doing is sort of zooming in, scaling in really tight to tight time frames if you're scalping, and moving the chart sort of off the scale so that you're only looking at sort of the most advantageous movements in price. All right. And ask yourself a question. What would I be thinking at this point? If you wake up in the morning, and I'm on, Eastern Standard Time, so I'm in the New York area. If I wake up in the morning, okay, and I see price doing this, and you even have a little retracement moving here, and then another push higher, what am I thinking? Am I thinking that price is just going to continue going higher once New York opens up? Chances are yes, to the untrained eye. But if you're paying attention to the things that we tell you about on this channel, the imbalances, where's the liquidity in price, where is it most recently left, then you have a different perspective. And all you would have had to do was zoom out, okay, to see that these are areas where price gets pushed down from. So as I saw this price action this morning, I just zoomed out to the 1 hour, took a look left, saw some areas there that pushed price down previously. Okay, there's about 2 or 3 of them, maybe even 4. And once I saw this, I said, okay, time to start thinking short. But, you get carried away with your morning and it just sort of continues. So we didn't actually take the short until 9:40 in the morning. All right. Now, at one point, I thought it ran away from me, right? Price dipped all the way down here, touched this imbalance, and then it came back up. Now, most people would say, okay, this is the retracement move. It knocked out all of these imbalances here. Boom, I'm going to go up. But I wasn't so sure. Okay, I wasn't so sure. This is a larger time frame, higher time frame level of resistance. Okay, you can zoom out to the 1 hour, the 4 hour, the daily. It's very easy to see on the daily. Okay, but without having that perspective, you wouldn't have been able to see this. So I knew that we needed to go short. Once price did give me an in, I took it. Right, so we took the short here, and price really didn't return back to that level. Okay, and it worked in our favor fairly well. And the only thing I was really aiming for was this liquidity area here, right? Now, I should have did what I said in the recording and just took the entire profit right around here, all right? But I took the take profit off. I was thinking, okay, New York's been bearish all day. They're going into the lunch hour. I'm not thinking that price is going to reverse in the lunch hour. And it actually did, right? I was thinking price wasn't going to reverse in the lunch hour, and it did. It just did exactly what I thought it wouldn't do, right? But this was the opportune area to take some profit. So we did take that 0.1 off, okay? And then from there, price just sort of ran against us. We did move our stop loss up a little bit, and then boom, it just took us out, okay? And that was the end of our trade. Now, price is currently sort of working its way back into this range and just teeter-tottering around here, right? So you may range out around in these areas for a little while, but what are we really anticipating, right? What would have been the really sweet move? The really sweet move would have been if price kept going down into these areas of imbalance here, right? Now you're starting to talk about $1,000 day, $1,500 day. And these are the things that we're going to be able to achieve in this market, right? We just need price to move in our favor, and we need to be in line with the price movement. But in all reality, it wasn't a bad trade. It wasn't a bad day. We saw this coming in regards to the short, but the short was short-lived, to say the least. But either way, we did add a couple of more wins to the win column, pushing our account up a little bit more, even closer to that $50,000. All right, so we're going to keep going. We're chipping away right now, and sort of like we're finding a pace right now with smaller wins. But as we start to compound and take larger bets in the market, because we have more money to bet with, then you'll start to see larger gains, even on small incremental moves like this, right? Like if you put enough money in for this particular move here, this is going to net you a pretty decent percentage, right? So this is about 2%, okay, on the day. You add a little bit of leverage to that, you're coming home with a pretty nice win. Okay, so let's take a look at a couple of other things on the chart, because we want to point this range out sort of on the daily as well, all right, and show you guys that when it comes down to what we're in right now, okay, and please go back to previous videos. We were discussing this in a number of different videos. Where is the range going to be? We're going into the FOMC, March 15th and 16th. Everyone's talking about what they're going to do with the rates, et cetera, et cetera, et cetera. There's uncertainty in the market, okay? I think that, the war in Ukraine has done something to the Bitcoin price, which has given us reason to believe that, it's Ukrainians or Russians that are really buying this amount of Bitcoin. And it does lead us to believe that there are now use cases that can definitely prove themselves out on the market when it comes to, utility of Bitcoin. And so this day, just these 2 days right here, you kind of want to mark them off on your chart, sort of as the days to remember. Price may do a lot of weird things in these areas, but these 2 days matter to me, right? February 28th and March 1st, all right? These 2 days matter to me when it comes to Bitcoin price. Let's see what happens in the future around these areas, but this could be an area of great interest moving forward as price continues, all right, for a number of different reasons. We won't get into all of it today, but just very interesting price action on this day that led us to these levels, okay? But if we take a look to the left, all right, we just look to the left, we can start to see some things developing here, all right? These highs started to get created in January. So if we want to go back to the beginning of the year, right? This is December 30th, 31st, this is January. January 1st was a bullish day, okay? But that was pretty much the peak of the year. First day in January gave us the highest point of 2022 when it comes to the Bitcoin price, all right? So then price started to fall in the first part of January, and then it rebounded a bit and created a high. Now, this is the high that's been respected pretty much every time we reach into these levels of around 44,000, 45,000, okay? Then it came down, crashed pretty hard, created a low, angled out sideways, made everyone bored, then boom, took off. Met the high though, again, all right? Down, came back up, met the high again. So now you have a triple top. All right, some people would have saw this as an inverse head and shoulders, but we see price breaks away from the anticipated direction, firm. But why? It reached a high, okay? Price is respecting this area. Now, boom, you reach the low areas again, and you spike down into the previous low, okay? All of this shows us that we are now in a range, okay? Price is just gonna come here for a second. Just want to visit it, but hey, look, signal this is where we're going, okay, when we find the lows of somewhere around 33, highs somewhere around 44, 45. So if we understand that price is doing this, all right, these are the areas where you're able to take longer term speculative plays, okay, and swing trades to say, okay, I can actually get in near the top of these zones, and if I'm in a relatively good position and I hold it, all right, and I don't get stopped out with craziness of the market, then I can turn sort of a scalp play into a swing. But the only time you're really able to do this is when you're in a range like this and when price is at the extremes of the range. Otherwise, do not think swings, all right? Because this can easily just reverse on you, okay? And you should be protecting yourself with stop losses and things of that nature. But this is the range, right? We said, where's the range gonna be? The range is defined at this point. You have 3 highs, 2 lows, nice little W pattern sitting up in here from 45 to 35. That's your range, okay? $10,000 for Bitcoin. Now, I think that this range will sort of maintain itself going into the FOMC. You may even get a push out of it, right, to grab liquidity. But that's a bit scary because what do we see? Imbalances to the bottom side, liquidity to the top side. You can grab it and come right back down into these areas of around 40K, a little bit lower going into FOMC, all right? So that's a possibility. The only other possibility that I see is for price to push up, notch out all of this liquidity here, okay, and fill this imbalance, which will get us up to around 50K before FOMC. So if we're bullish, this is the scenario we really want to see. And if things are going to range out, I'm thinking we'll be somewhere around, let's say 42 to 40 as we start to go into the FOMC, maybe a little bit lower than that, okay? The 15th and 16th are essentially right here, okay? So where my cursor is, these are the days, right? So you could see sort of a downwards angle or something like this. Let's just notate when these days are. That's the 15th and the 16th there, all right? And we'll pull out a little tool to get an idea of what could happen with price, all right? So if we get rejected here, okay, we could angle out and kind of scale around here for another minute and then sort of start to push our way into these imbalances, right? By the time you get to the FOMC, you're looking something like that, all right? Somewhere around 40, a little bit lower, okay? Now, there is also an opportunity for price to do something like this, okay? Where it comes down, sort of fills this imbalance pretty quickly, comes up, comes back down, grabs liquidity here, and then pushes up, going into FOMC, what kind of puts us right back in this range. Now, if you're thinking really bullish, okay, the only way that I can really see us going into FOMC positively is if you just sort of bounce here and use this as sort of a support turned resistance to fill this imbalance. Now, about then, we'll get to the FOMC, but this type of price action, I mean, looking at it, it is possible, right? So in my opinion, you're either going to swing in a range, okay, or if you do get bullish price action, you want to look for that confirmation. So, you know, if this does flip to support and price does bounce off of this, then happy days, right, going into the FOMC. But if not, then I'm anticipating us to sort of swing to the lower areas of this range by the 15th and 16th. All right, so that's what we're seeing in price. Let's take a look at a couple of altcoins because there's a lot of things that we can highlight here when it comes to the scale in and scale out positions on the daily and how these levels are literally just getting respected on almost every coin that we've drawn up. All right, so let's take a quick breeze through a few of these here. Okay, looking at Bitcoin on a daily chart, and again, we use a very specific method when it comes to scaling in, scaling out of long-term positions, right? We are on the daily chart, so these are longer-term plays, but again, scaling in and scaling out at areas of liquidity and imbalance in price, just like we do it on lower time frames, we can do it on higher time frames as well, guys. The same method applies, the same rules apply, and all you have to do is just line your levels up, okay? There's even a level to where you can automate this, right? So for example, what we want to do with this tutorial, and this is why it's taking so long to build, because there's going to be parts to it, right? We're going to give you the entire full system on how to do this, okay? So basically, we're going to show you how to draw the premium levels, the discount levels, high premium, low premium, discount bargain areas. We're going to show you how to achieve that, right? We already have tutorials. You can look up here and find that tutorial. Then we're going to talk about imbalance liquidity, the things that you're looking for on your chart to draw your scale out, scale in levels. Once you have your scale in and scale out levels, it becomes very easy for you to just say set up limit orders in Coinbase or whatever broker you use, okay? And it's as simple as this. Once you get your chart drawn out like this, you say, okay, I want to place an order on Bitcoin when it reaches, say, 35,000, okay? Now you'll see. If you set your areas up properly for scaling in, price will come down here, touch these levels. It may hang out for a little while, but maybe not, okay? And it should take off just based on the normal things in price that we're looking for, right? Areas of liquidity, areas of imbalance, okay? And where do we get out? Pretty much within that same range, guys, that we were talking about on the previous example on the lower time frames. Where are our scale in and scale out zones? 34 to 45, okay? Where's price been trading all year? 34 to 45. If you would have played this, okay, you have two opportunities where you would have been able to get in just this year, okay? So this is January 5th, January 4th. Price came down, hit the scale in area, scale out, okay? That's one, I think that's about 22%. We can draw it out. All right, let's just be modest and draw it from, let's say this candle here, all right, to, let's say you got out somewhere around there. All right, that's around 22%, okay? But you were able to do it twice. This is the first example. This is the second, okay? So you're taking profits at these levels. You know, 44% in 2 months, guys, that's what you're looking for when it comes to playing a portfolio from the long term, all right? Scaling in, scaling out, not worrying about whether or not you're going to be able to hodl Bitcoin. You know, these are ways that you can just play this market, put more dry powder in your portfolio, buy more Bitcoin with the dry powder that you're putting in your portfolio because you're not holding on for the wild ride in this range, okay? So that's the thing that we're going to preach over and over and over again when it comes to us analyzing these charts on a higher time frame, right? Setting this up, sort of automating it, set it, forget it. You know, you want to pay attention to what you're doing, definitely. If you put any market orders on, if you put any limit orders on, you have to be aware of what's happening with price. You have to know when those orders get hit. And you have to watch the price to make sure that price doesn't go directly against you and clears out your account. All right. So these are the things that we're gonna put all of this into the tutorial. You guys have a full walkthrough of the entire way that we do this process. Okay. So let's just take a look at a few more coins here and then we'll close out for the day. Ethereum, right? And the thing that we're highlighting here, again, scale in to scale out, right? Price is going to give you opportunities to swing within these blue lines to orange lines, right? Scale in, scale out. Very simple to see, guys. Very simple to see. As price is zigzagging like this, it's going to deliver for you, right? Even here, when it comes to Terra Luna, look at this. We said Terra Luna is not going to stay in these discount areas for long, right? It doesn't. Why? How do we know that? Look at what it does when it gets here. It launches. This is not normal price movement, right? We can zoom out and see, right? There's buyers here. There's people investing in this, okay? So when you get to this discount area, anywhere under 53 bucks, boom, that was the entry, okay? And if you would have gotten in, this is not too long ago. We were doing videos in February. We were talking about Luna in January, okay? February. Price here, boom, launches right out of that area and hits what? A scale out zone before it does what? Just turns around, right? What did it do here? Hit the scale out area, turned around. This is the bullish day, right? So we expect scale out areas to get just demolished when it comes to very bullish days like this. But what would you do on a bullish day like this if you were holding, right? If you were in, right? Yeah, scaled in, you're holding at this point. You don't sell at the scale out, right? You're on a major up run. I think Luna was up almost 20% on this day, or not better. Okay, so you hold, you hold on days like this, guys, and you just wait. And you would have been able to scale out at a much higher level because you see it just reached for it and then it started to come down. All right, AVAX, you can sort of get the same exact effect. All right, scale in, scale out. All right, you come back down, back into your discount zone to low premium zone. If you need a easier way to do it, discount to low premium. If you're looking for exact levels, scale into scale out levels. This is all it is, folks. Very easy to see, very easy to draw, very easy to automate and set it and forget it and not really think about what you're doing in the market every single day. You don't have to get caught in the FOMO. You don't have to get caught in the FUD. You can just play the market based on what the market gives you, okay? Scale in area here, right? Order block, boom. Price touches it, takes off, all right? Discount to low premium. It's here, okay? Same thing over and over and over again. It really doesn't matter which coin we've drawn this up on. It all materializes. Scale in, scale out, scale in, okay? They're going to give you opportunities. If price is stuck in a range, this is what we're seeing, okay? We are playing the lows to the highs, okay? Waiting for the lows again to play the highs. Very simple. Sandbox. Same exact thing, right? Scale in, scale out, scale in. Simple. Let's take a look at, what is this? Chainlink. Chainlink, a little bit disappointing, right? It's sort of been depressed here. But I think that's because of, you know, all of the other coins that are essentially sort of just taking over the market right now. Everything else is hot. Metaverse, NFTs, all of these other things, right? So your main utility coins, even though they still have use, you know, they're not as exciting, so not as many people are jumping into them, right? So you're going to have more of a sort of depression in price. You can look at XRP, sort of same thing. But XRP is sort of stuck in this discount zone. I think XRP is going to launch out of here when they get done with this this lawsuit, okay? But again, accumulation zones, folks, right? As long as I'm buying in the lower areas in price, I'm good to go. I'm good to go. And price has done the, you know, most remarkable thing, which is giving us a chance to buy in these areas again, because XRP was what? At, you know, $1.40, you know, even higher. XRP was at almost $2 at one point, right? It doesn't have to come back down here, guys, but it does. Right? And so you want to take advantage of this, even though most people are scared in the market when they see prices like this, right? Solana is another one that kind of worries us a bit, right? It kind of falls into these discount zones, doesn't bounce out very aggressively, even though, you know, you do have sort of a mountain peak here. And this is the type of price action that you do want to see some sort of really aggressive push up. Now, Solana did have a good day the other day, right? But again, the entire crypto market had a good day the other day. We want to see Solana kind of do this on its own, right? But again, good scale in areas here for Solana as well. We can go down a number of tokens. Let's just take a look at a couple more. I'm kind of just picking these randomly. All right, scale in areas here, right? Discount to low premium. We're falling lower in discount areas here, right? So not exactly every single coin, but the majority of the coins that we're taking a look at, right? The power players. You can play this scale in to scale out. And again, I think that some of these lower coins that aren't really showing the aggressive pushes back up to the low premium areas, they just haven't had their day yet, but they will, all right? So we're anticipating that this market will continue to keep growing, right? Let's just take a look at the total market cap. And again, guys, we say, and I'm going to keep saying this level, and nobody really talks about this level or in regards to a number, but I think this is a psychological level at this point, right? We broke above 1.89 trillion on this bullish day, and we stayed above it. Everybody's happy. But if we break back below this level and start to eat up some of this, everyone's going to get depressed again. I really think that this is a psychological level at this point. And really all it is, guys, we're just sitting right in the middle of a 2-year range. All right. And we're sitting right on the line, the center line of essentially a 2-year range when it comes to Bitcoin and crypto. Okay. So as long as we're above this line, market's strong. As long as we're below this line, the market is weak. The market is bearish. All right. And this is the way that we're able to look at it, folks, sort of from a long and a short term perspective, and break down the trading into an easy to understand way and method to approach the market. All right. When things get too complicated and guys have too many lines on the charts and 1,000 trend lines and 50 million indicators, these are when the moments get very convoluted for you, right? As a new trader, you should never get into the practice of finding more indicators and finding more ways to draw chart patterns and trend lines. Eventually, your charts get very, very deep with annotations, and those annotations will start to go against your indicators, and your indicators will start to work against what you're seeing on the chart, and all of it just starts to breathe an air of confusion for you, right? What we try to do here is break this down in a very simple, straightforward way so that you can say, oh, this is what he's looking at. Oh, look at that gap in that candle. What is that? Imbalance. Oh, look at these equal highs and equal lows. What is that? Liquidity. What should price do? Go to the imbalance, snatch the liquidity on the top and the bottom side. It's as simple as that. That's trading plan on a business card. That's a trading plan on a napkin. And if you can do that effectively, guys, this is how you maintain in the market. All right. This is how you maintain a winning account. This is how you maintain, you know, your portfolio. And you don't get wrecked with all of the other things that are meant to set you up in the market in the first place. All right. And we're going to keep proving this every single day on this channel. So if you learned something today, if you think that you can be a better trader just by rocking with us a little bit and understanding the things that we're doing in this market to essentially have 8 or 9 wins in a startup account, right, and 1 loss, and, you know, easily show you guys what we're doing. The thing that I hate about Instagram at this point is that, you know, all of this finger pointing and, oh, look at this, look at that, look at this, look at that, and, oh, look at this, look at that. No. Show people examples. All right. Like, I'm going to start to put a challenge out there to the mentors as well. Right. And there's some really good mentors out there. Don't get me wrong. But a lot of them, there's a lot of mentors out there that are showing you the wrong things, that are giving you bad practices, that are giving you bad ways to even think about the market. And it's all based off of some sort of success criteria that they can show you. Right. But they never show you a trade. They never actually show you what they did in a trade. They never walk you through step by step. The bad mentors, they never do this. They'll show you the end results. They'll show you some numbers. They'll show you an Excel spreadsheet. They'll pop something up on the screen very fast for you to see and say, oh, wow, that was neat. But they're not going to show you what they did step by step in the trade. And there's no secrets here, folks. There's no secrets. Everything that I've learned and that I've shown you here can be learned in other places. Okay. In fact, I told you in my very first video who I learned all of this stuff from. All right. If you want to know, go check it out. Right. And the guys that understand trading and I have been in this for a while, they know where we pick this stuff up from. But this is not rocket science. This is not a secret. And anybody who thinks that they have an edge on the market and they have some sort of special secret sauce to winning and they don't want to share it, and that's the reason why they don't show you their trades, it's cap. All right. It's completely cap. Don't go for it. We will continue to keep it real on this channel. We will continue to bring you content like this. Win, lose, or draw, guys. We're going to show you how to make some money in this market. All right. So it's your boy Maestro. We up out of here. It's the long and short. You know what to do if you're looking for this type of information. You know what to do. I shouldn't have to tell you. All right. We up out of here. Salute.